Is the Bajaj Allianz Long Life Goal 3 plan the ideal blend of insurance and investment, or should you look beyond ULIPs? Let us find out the answer to this question through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. So now, before analyzing this policy, let us first understand a few basic details about it. This is a unit-linked, non-participating whole life insurance plan. Some of the key features of the policy are: it provides you with life cover that lasts your entire lifetime, and there are two plan variants, one with waiver of premium, another one without the waiver of premium option, and they also return your charges of premium and mortality charges. And there is a retired life income option which helps you generate a regular income during your retirement, and you also get to earn loyalty additions every year from the 10th to the 25th policy year for policies with an annualized premium below 10 lakhs. So there are flexible investment options as well, where you can choose from 4 different investment portfolio strategies, and you have access to a wide range of fund options to suit your risk appetite. And there are benefits like death benefit, maturity benefit, retired life income benefit, and loyalty additions, which also will be helpful for you in this policy. And along with other options, there are also various charges that they deduct from your policy, like fund management charge, premium allocation charges, policy administration charge, mortality charge, and all these charges are act as an overhead cost for the investor. So all these significant charges will be add to the overall cost and will definitely decrease the overall returns that you can get from this policy in a long term period. So you need to consider this as a drawback. Now let us take a look at the advantages. So you can make partial withdrawals anytime after completing the 5th policy year, and you can switch between funds under the investor selectable portfolio strategy, and also apportion your premium across multiple funds as per your choice. And you have the option to reduce the regular or limited premium amount, and there is a flexibility to change the premium payment frequency as well. And you can switch from one portfolio strategy to another on any policy anniversary. You can also receive the maturity or death benefit in a lump sum or installments based on your needs. And mortality charges are deducted during the policy term or periodically added back to your fund value. And the waiver of premium charges are also returned periodically, boosting your overall fund value. So these are all some of the advantages of investing in this policy. However, the disadvantages are this plan does not allow for any additional top-up investments beyond the regular premium. The regular income offered is also fixed, and it does not account for inflation, which may actually reduce the purchasing power over time. And you cannot avail of a loan against this policy. The asset allocation across different fund options also appears to be largely similar, making the range of options seem repetitive and limiting diversification. So while charges are returned periodically, they do not account for the time value of money, reducing the real benefit to the investor. Also, this plan does not offer any liquidity for the first 5 policy years, restricting access to your funds in case of emergencies. So these are all kinds of drawbacks that you need to keep in your mind before deciding to invest in this policy. And if you do want to know more about certain aspects of the policy, you can definitely refer the policy brochure. So now, as we have a basic understanding about this policy, let us move on to the analysis part of the video, where we are going to conduct an IRR analysis based on the benefit illustration given in the policy brochure to help us make a more informed decision. So to calculate the internal rate of return, for calculation purpose, let us assume that a 35-year-old male has chosen the Long Life Goal 3 plan without waiver of premium option. So he's paying a premium of 1 lakh rupees per annum for a payment term of 20 years with a sum assured of 10 lakhs. So his retired life income option is not chosen, so hence maturity benefit will be paid to him at the end. So assumed lifespan would be 65 years in this example scenario. As this is a unit-linked policy, we have taken up 2 projected returns, 4% per annum, 8% per annum, as given in the policy brochure, just to show you how this policy can perform in a worst-case scenario and in a best-case scenario. So at 4% projected return, the returns comes around 31.87 lakhs, yielding an IRR of 2.26%. At an 8% projected return, the returns are 71.69 lakhs, yielding an IRR of 6.13%. So even under the optimistic 8% scenario, the returns are modest. So bank fixed deposits can potentially offer comparable or even better returns with greater liquidity and lower risk. Moreover, this plan fails to beat inflation in the long run, making it a poor fit for those seeking real wealth creation. So the value of money for in this plan is questionable with limited returns and a lack of inflation protection. It's hard to justify choosing this over more efficient market linked or fixed income investment options. So as this policy is not giving us a desirable outcome we need, now let us move on to a comparative analysis where we are going to explore a more effective investment strategy and compare it with this plan using the same assumptions from the previous example just for a more fair comparison. So here in this strategy, we are going to invest in insurance and investment separately instead of bundling it and investing in an investment cum insurance policy. So for life cover purpose, we have opted for a pure term life insurance policy with a sum assured of 20 lakhs, which would cost us an annual premium of just 4,900 rupees annually. The balance amount of 95,100 rupees can be invested in other investment products like PPF, which is a low risk product, or equity mutual fund, which is also a high risk product comparable to Bajaj policies riskometer. So the final value in the PPF investment is 83.81 lakhs with an IRR of 6.86% as per the policy's maturity calculator. So the final pre-tax value in the equity mutual fund is 2.38 crores. So the post-tax value is 2.11 crore with an IRR of 11.20%. So if you have any doubts regarding how the tax is calculated here, we do have a small tabular column presented on the screen for your easy reference, which you can pause and see. So this term insurance plus investment strategy not only helps you to accumulate wealth for your financial goals, but also ensures your family is protected with adequate life cover, and most importantly, it gives you complete control and flexibility, which the Bajaj policy fails to offer. So what is the final verdict then? Is investing in the Bajaj Allianz lifelong life goal 3 plan worth it or not? So this policy is marketed as a market linked solution for long-term wealth creation. However, a deeper analysis reveals that the potential returns fall short when compared to other investment products available in the market. So if you choose the retired life income option, the payouts are unlikely to be sufficient to cover your post-retirement expenses. Even without opting for that option, as seen in the benefit illustration in this example, the maturity benefits are modest and the internal rate of return is also unimpressive. Additionally, the life cover offered under this plan is not adequate, especially when compared to a standalone term insurance policy. So in essence, this is a long-term commitment with underwhelming returns and limited flexibility, and it also has a high agent commission. From a pure investment standpoint, it lacks value and does not align with the financial goals of most investors. Rather than tying up your funds in a high-cost ULIP like the Long Life Goal 3 plan, consider an alternative investment strategy where you opt for a pure term policy and invest separately for life goals. This strategy not only offers you with higher potential returns, but also provides greater transparency, liquidity, and control over your investments.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.